Okay, in Market Revelation Part 1, okay, we talked about how the order flow applies to the retail traders, and we isolated the retail trader bars. Excuse me. And in Revelation 1, Market Revelation 1, Part 2, okay, we talked about how the market responds to the rest of the market participants other than the retail traders. Okay. Now here, this is Market Revelation 2. Okay. We're going to talk about how the markets have memory. Markets have memory. All right. Exhibit A. The lines you see on the chart. Okay. These are not support and resistance lines. Okay. These are order flow lines. Okay. The red lines, okay, they are sellers who are holding long positions long term. Okay. For instance, if I put here, this line is from 229 months ago. This line is 64 months ago. This line is 135 weeks. This line is 88 weeks, 71 weeks, 15 months, 15 months, 140 weeks, 121 weeks. All right. So now, don't be confused. Okay. These are not support and resistance lines. Okay. So now, when market is falling, the market is going to fall until it reaches buying. Okay. Now, the green lines represent long-term short positions. Okay. So if we get a close below a red line here, that means that we should expect the market to go to the next red line. Why? Because there is no green line in between, meaning there is no buying in between here. Once we close below this line, there is no buying, and we would expect to go and continue down until we reach a level of where buyers are located. Okay. So now the market, they may respect or seem to respect the red lines when price is moving down. However, what that constitutes is exhaustion. Once these traders go short or close out their long positions, okay, then the exhaustion is the next level here. Okay, because then there's no more selling coming in from a long-term perspective until we get below this line, and it works all the way down the same way. Okay, now we may get a reversal off of one of the red lines. Okay, but only because if when selling is exhausted, it takes very little buying, okay, to make a pop, okay, or a move in the opposite direction. And but to get a serious move, we would need to get above. Here are the shorts. We would need to get above them, okay, to go up. But on the way up, okay, if price is moving up, the red lines, yeah, they are resistance because as price is moving up, it's moving up into selling. You got a lot of sellers here. If you get above the selling here, okay, then we would expect to go up because there's no more selling in here until we get here. And if we want to go up higher or expect to go up higher, we need to get above the selling, and so forth and so on. Okay, and let's take a look at pound dollar here. Okay, you can see how, and it works the same way. I mean, it really doesn't get any more simple. But then again, you don't know where the buyers and sellers are, and you don't have this tool. My tool is proprietary. Okay, but you see as we come down here, okay, and price gets into the buying zone. So now if you're short and price gets down here, you know it's time to get out, because if you're short, you don't want to be in a zone where people are buying, right? And if you're long, you don't want to be where people are selling. correct? Let's look at the dollar Swissy here. Okay, and so it works the same way on the way up. Okay, if price breaks and closes above buying here, okay, that brings new buying into the market because these shorts are getting out here. Okay, you don't see any red lines here to tell us that they're selling to stop the up move, so we would expect price to move to the next green line or buying, which is exhaustion. Okay, now if we get above it, okay, that next gear kicks in, the next these buyers start, and we go up, and notice when we hit the red line here, we got selling coming in, and so we stall, we go into a consolidation. Okay, so when price is falling, you want to look for a order flow reversal off of the green line, right? When price is going up, okay, we want to look for order flow reversals down off of the red line. And it's just that simple. And if I'm wrong, then why is price respecting the levels? Dollar yen, close above, go to the next, close above, go to the next, close above. Aussie dollar, okay, look at all this buying down here. Okay, so sorry, Aussie New Zealand. Okay, and you see how when price is falling here, okay, the red lines, didn't stop it, but once we got into the buying here, like this is buying from 147 days ago, this is buying from 153 days ago. Okay, but that's what causes the bounce. Okay, there's only one thing that makes a market rise, and that's buying, and there's only one thing that makes a market fall, and that's selling. Okay, well, I shouldn't say that's the only thing that makes a market fall, because a market can fall due to its own weight. A market can fall simply because there is no buying. Okay, all right, thank you. Markets have memory.